Number 2, investment in Jazz Limited. Disco Limited acquired 110,000 shares in Jazz on 2 January 2021 for a cash amount of 110,000. Now, when you look at the left side, this will be our journal entry. Debit the investment and credit our bank, right? Now, Disco Limited purchased another 550,000 shares in Jazz for a cash amount of 1,347,500 on 1 January 2022. On this date, Disco Limited obtained control over Jazz, and the fair value of the plant and equipment, which is the only asset liability of Jazz, was 2.75 million. Now, if you were to look at a timeline, they've purchased the investment in 2021, right? Now, on 1 January 2022, there is a change to a subsidiary. Therefore, on this date, this is a normal IFRS 9 investment, which we will have to take out, and we need to include our subsidiary. Now, when we look at the statement of financial position, our investment in Jazz has a value of 209,000, movement to 0, which does make sense. Now, we need to identify, and you need to think about all of this. If you take this one step back, if we need to take out our IFRS 9, we need to include our subsidiary. We need to remember to include our NCI as well, and then we consolidate, therefore, all of our assets and liabilities, sorry, not A and A, all of our assets and our liabilities, and extremely important, our easy mark, 1,347,500. We purchase, therefore it's an outflow of cash. Now I'm going to work through the steps with you just now. Immediately I'm going to transfer this because we purchase. It's an acquisition of a subsidiary, which is Jazz Limited. I'm just going to write this here. It's an acquisition of a subsidiary, Jazz Limited. Luckily, there's no cash, 1,347,500. This is our outflow, right? Now, if we think about our steps, number 1, we had to identify our cash portion. Number 2, we need to include our assets and liabilities. We need to include our NCI. We need to think about possible goodwill or gain on bargain purchase. Now, the goodwill is irrelevant because you will be able to remember. If you look at the information in terms of our statement of financial position, there's no movement in the goodwill. But if there is a gain on bargain purchase, we will have to take this out because this is non-cash. Now, we have already transferred the cash portion to the face of our cash flow statement. We now need to identify the assets and liabilities to include, and they indicate to us it's the 2750. Therefore, we transfer this to our T account, 2750 on the left side. We plus our subsidiary, Jazz Limited, 2750,000. Right. How do we calculate the NCI, or if there's a gain on bargain purchase? Now, we know that Disco has 60%, therefore 40% will relate to our NCI. Therefore, pretty straightforward, your 2750 times 40% based on proportionate share will be allocated to your NCI. Therefore, our NCI will increase on the credit side, plus our subsidiary, which is Jazz Limited, and this is 1100,000. Now, we need to calculate our gain on bargain purchase. Now, you will identify, if you look at this table, very similar in terms of your analysis of owner's equity. This is just something that I prefer to do because it reminds me of all of the different elements that I need to take into account. I have my total column. I have my column relating to my parent and my column relating to my NCI, which I have transferred. Then my consideration, I have the 347,500. I know the value of my previous shares, 209,000. If I allocate 60% of the net assets to the parent, which is 1,650,000, minus the consideration and the fair value of the previous shares, I have a gain on bargain purchase of 93,500. Now, let's call this my calculation 2.1. And I will have to take this out from my other expenses. This is my gain on bargain purchase, 93,500. And this is my calculation 2.1. And I need to take this out. Remember, it was an income, therefore it decreased my expenses. But now, if we take it out, it will increase my expense. Right, therefore, if we now look at our steps, we have now included all of the relevant steps in terms of our cash flow statement. Investment in Hip Hop Limited. Disco Limited acquired a 60% interest in Hip Hop Limited on 1 January 2021. On this date, Disco Limited obtained control over Hip Hop. Right, we now know that there is no goodwill in terms of the acquisition date, and that indicates to us that Disco sold its entire interest on 1 October 2022 for 1503612. Disco Limited lost control, and the exchange rate was 19 Rand on 1 October 2022. Now, if you look at the right side of my screen, I've identified my steps. Remember now that this is a subsidiary and they've sold the subsidiary. Therefore, we will have to take out everything in terms of this subsidiary. But first, our easy marks. We need to identify our cash in terms of our cash flow statement. Therefore, they've sold the subsidiary for 1503612. But what do we need to take into consideration? Our bank account. Remember, now when we look at this, there's a bank overdraft. Therefore, this is a negative. This was included in our group records. But first, we need to obtain the Rand value. Therefore, if we have our plant and equipment, and we times this by 19. If we have our trade receivables, we times this by 19. And our bank, we times this by 19. We need to take this out. This 627,000. Now look at this. It's a negative. Now if we need to take this out, we need to add this to our 1.5 million. We need to add this to the 1.5 million. Therefore, on the face of our cash flow statement, when you look at our cash flow from investing activities, we have our proceeds from the disposal of our subsidiary, the 1503612, plus our bank account, 330 times 19, and this will be an inflow of cash. Remember, proceeds, we sell. Right, then our next step, when you look at the right side, is to determine our profit or loss on the sale, because this will be included in our other expenses. Remember, they've indicated to us any other amounts were included in our other expenses. This is in note 1, and we will have to take this out. Now, how do we calculate the profit or loss? If you refer to our calculation, let's say we're going to call this our calculation 2.2. We've already made use of 2.1. Look at the left side, calculation 2.2. We need to obtain our consideration paid, and this is a Rand value, 1503612. Remember, then we need to take out our assets and liabilities, including our NCI's portion. Therefore, if we now look at our assets and our liabilities, we have calculated the total in terms of our assets and our liabilities to 664,750 to 664,750. We need to take into account our NCI's portion to 664,750 times 40%, and our NCI's portion will be an amount of 1,065,900. Therefore, we take out the net effect. This is 1,598,850. We are able to identify that there will be a loss. Look at this, not a profit. This is a loss that we need to take out. Therefore, our loss calculated in calculation 2.2 that we need to take out, therefore add back, is 95238. 95238. Right. In terms of our steps, we've completed step number 2. Step number 3, we need to take out our assets and our liabilities. Therefore, when we refer to our plant and equipment, 2.1, our plant and equipment, if we need to take this out, our plant and equipment will decrease on the credit side. Therefore, minus our subsidiary, Hip Hop, 2.1. We're able to take it off. Then our trade receivables, 109,750. Trade receivables will decrease on the credit side. Hip Hop, 109,250. We take this out. Right, next step, our NCI. We need to take out our NCI. We've calculated our NCI. When you look at the left side of our screen as 1,065,900. Now, when we refer to our NCI will decrease on the debit side. Therefore, minus our subsidiary, which is Hip Hop. You don't have to write this. I do this for you to be able to follow my discussion. Calculation 2.2. And this is an amount of 1,065,900 that we need to take out. Next, number 5, we need to take out our FCTR and reclassify this to our profit and loss. Important. We need to reclassify this to our profit and loss. But to be able to do this, we will have to calculate the portion that will be allocated to our parent. Right. Now, if we look at the next sentence, they indicate to us an amount of 8778 regarding to the foreign exchange rate gain in the current year on this investment has been allocated to the NCR. Okay, right. Now, first, let's have a look there. Have been allocated to our NCR. Now, what does this mean? If you think about your analysis of owner's equity for me, on the right side, imagine that this is your analysis of owner's equity. Now, they've indicated to us the portion that will be allocated to our NCR will be 8778. Okay, now let's just take this one step back. Our analysis of owner's equity will include our total column. Okay, first there will be an FC column, and then we will have our rand value, and then our total column. Then we will allocate 60% to our parent and 40% to our NCI. Now, they provide us with the NCI's portion, but we do not have this portion here, the parent's portion. But we are able to calculate this because 8778 represents 40%. Therefore, 8778 divide by the 40 times 60 will provide us with our 60%, and this will be an amount of 13167. Therefore, 13167, and that 13167 should be allocated to our FCTR account. Right, now let's just first transfer the 8778 to our NCI. Okay, so if we look at our NCI, and you think about your analysis of owner's equity. Our NCI will increase on the credit side. Therefore, let's include here that this is the FCTR. They've provided this amount to us, the 8778, right? And then in our FCTR account of the group, we need to include the FCTR. Remember, only the parents portion. And this is 13167. 13167. Therefore, we have now transferred both of these amounts. Now, our IAS 21 principle indicates to us that the FCTR balance should be transferred to our profit and loss. Therefore, we now need to reconcile this account. If we reconcile our FCTR account, this will be a total of 52767, and on this side 52767, which you do not have to include the totals. I just do this to indicate to you what is the meaning of reconciling our accounts. And our balancing figure will be the 52767. Therefore, if you think about this, we debit our FCTR, we credit our profit and loss. 52767, 52767. And we need to quickly just indicate here, how did we get to this amount? 8778 divided by the 40 times 60. Right. Now, if we credited our profit and loss, you agree with me that we have decreased our expenses because our expense increased on the credit side. If we need to add this back, we need to deduct this. It's our calculation number 8, our FCTR, calculation 8. We need to add this back, therefore 52767. We need to add back. Therefore, this will increase our expense account. When we now look at this, we have completed all of our steps.